Good morning. This is Tom Alexander. This is the weekend stock market update. It is Sunday, March 24th. It is about 10:15 a.m. Eastern time in beautiful Charleston, South Carolina. We have another week. We have another new all-time high in all the primary indices, weekly high. And we have, as expected and as is typical, we have people coming out of the woodwork from all quarters projecting the all-time grand nuclear supercycle top and imminent crash and doom. Now, if you're a trader, that's not really useful information. The reality of this market is we're in a bull market, and there have been other bull markets. There have been other legs within bull markets that are just as strong as this one. So why don't we trade the market we have instead of what everyone says the market should be doing or will be doing? And right now the trend is up. So the reality is, until there is some objective signal that the trend is down, you trade from the long side or you're flat. But trying to fight this market is an exercise in futility. In this weekend's report, which you can, if you did not receive it, by the way, I send out a notice that this video has been posted. I also send out a notice that the written report has been posted to people on my list. If you want to get on that list, if you're not receiving the report, send me an email, tom@alexandertrading.com. It's free. You can avail yourself of all the information I'm going to share with you, including charts and more detail, by going to alexandertrading.com. Go to weekend updates. They're free. You can click on this weekend update. You'll see all the information there and more that I'm going to share with you. But the important point here, let me show some charts. I can't overemphasize enough how important it is to separate the emotion of the masses and in particular gurudom from trying to make money trading. So if you look at my screen here, what do you see? Well, you see a market that's basically going straight up. From the October low, we're up 28%. Now, if you're looking for some sort of retracement, that's going to occur. We're having retracements. They haven't been very deep. If you're looking for some nice, convenient 10% drop to get in, well, maybe not. But again, let's trade the market we have as opposed to the one that we think we're going to have or should have, or someone else is projecting using some form of magic. So the trend is higher. Now, again, there have been other instances where we're in a bull market, and this is just the latest leg in this bull market. And if you want to argue with that, I really can't help you. I have gone back. I've seen a lot of analogs about the current market, and one of those analogs always seems to point to the 1990s, and in particular to 1995. Well, in this weekend's report, I showed 1995, and I showed the retracements. And bull markets in particular tend to have a personality, and bull legs within bull markets tend to have a particular personality. They'll go up, they'll retrace, they'll go up, they'll retrace in a very specific pattern. This is the 1995 trade. This is a daily chart, and you can see that the retracements were extremely consistent, and they were also very limited. The largest retracement in 1995 into the end of the year was 3.5%, and that lasted a few hours. And that's sort of similar to what we've had so far. We've had, I think, a 2.6% retracement that lasted a total of 9 hours. So if you think this can't continue, you're wrong. It can, and it very well may. And the signal that it is not continuing is when something different begins to happen. Now, I also took 1995, and I've just, since I was on a roll there, I continued and I put the bull legs that in 1996, 1997, 1998, all the way through the year 2000. Okay. And you can go to the website if you want to study this. I have posted these charts. Now let's take a look at the current market. So if this, what is the pattern here? Well, here's the pattern here. And this is since, now this is, this year. The retracements from the October low into the December high were even more shallow than these. But these retracements that are occurring fairly consistently have ranged, and this is from print high to print low. This is not close to close. The close to close retracements are even more shallow than what I'm showing here. So we have 1.6% down to a 2.252%. If Thursday marked the latest and greatest top prior to a massive crash of 1.66% or greater, that would bottom somewhere in this area, 51.71 to 51.29. Now, 51.71 also happens to be the low of the Fed ramp. So this is a logical area to be looking for an opportunity to perhaps buy. Well, what if it's not, Tom? What if it's the signal that we're going to crash? Well, if it's the signal we're going to crash, it has to take out 51.29 on the way down. If it closes below 51.29, that's an initial signal something is different this time, and then that's a trade decision itself. It doesn't automatically mean, oh, if it closes below 51.29 I go short, but what it does mean is you take a look at what's going on at that point in time, and I'm not going to predict what that would look like. Don't have to predict what that would look like. If it occurs, then we can take a look at it. But right now you see this trend line that is just being followed in an uncanny fashion in the SPX. And I'm not going to get into the other indices. I don't want to make this too long. I have covered the other indices. I have covered the levels, and the NDX, the Russell 2000, and the Dow in the report, again, that you can access from the website. But the reality of this is, guys, we're in a bull trend. And until we have some objective signal that we're not, don't waste your time, energy, and especially your money trying to be the person that catches the all-time high and then gets 10 handles in the S&P out of it. So that's sort of where we are, guys. Again, we'll have an interesting week coming up. Last week, I think, was the strongest week we had this year. We could have another one next week. I hope you guys have found this helpful. If you did, please like the video, subscribe to the channel, all of the above. You guys have a great remainder of your weekend. I'll be in touch.